Okay, coworkers, let me show you how to find out information about your investment types. So go ahead and click on 401k savings plan. Your next page will look like this. It will tell your investment strategy. Go ahead and click on change investments. Okay, when you get to this page, you can go ahead and just click on fund performance. On the fund performance page, let's try 2020 target date, or SSGA target retirement 2020. Okay, so on this page, you'll see the fund objective. It says the fund seeks an investment return that approximates as closely as practical before expenses to the performance of a custom benchmark over the long term. Right? So what it's saying is it's comparing the 2020 target date with the Dow Jones 2020 target date. So when you look at this is a fairly new fund. You see the comparison for the last year. You see that the 2020 target date is actually outperforming the Dow Jones target date. Okay? This next portion, it tells you how the fund is set up. It looks like it's well, when the fund first started, it looks 45% equity, 55% bonds and cash. And so what it's doing is it's gradually increasing the bond and cash percentage, and it's reducing the equity percentage as time goes on. So in the next 5 years, it'll be down to about maybe about 30% equity and about 70% cash and bonds. You see the red line? That's where you're at. In about 5 years, it'll reduce you down to about 30% stocks or equity, 70% cash and bonds. And then it'll stay the same after that. This next portion, you can look at how much they charge for you to be in the fund. And the net expense ratio is the annual cost associated with managing and operating a fund, which includes operating expenses. It may also include administrative expenses, and from time to time they'll reduce it by any expense waivers or expense reimbursements that the fund manager may apply. So that's just the overall for that one. Let's choose the topic here. Performance. On the performance page, it tells you as of 3/31/2019, it tells you how it's done versus the other benchmarks. So you see the 2020 target date at the top. You see the Dow Jones 2020 target date. You see the global target date, which is the S&P 500. So you can see how the 2020 target date performs versus these funds. Year to date, it's behind the S&P 500, which it should be. This is more of a conservative type of a fund. S&P 500 is pretty aggressive or pretty risky. 2020 target date is very conservative. They don't want you losing your money because they figure that you're headed towards retirement. So you can look at the 1 year. It doesn't really compare to 3 year and 5 year because it's a newer fund. But you can see how the Dow Jones compares to the S&P 500. The 10 year. And then it gives you the overall since the fund's inception. This next portion, it will tell you what the returns were for each year that the fund was available. So as you see, in 2019, there was nothing that had a positive return between the 2020 target date, the Dow Jones 2020 target date, the S&P 500. None of them had a positive return. For 2017, 2020 target date had a 13% return. Dow Jones had like a 10% return. S&P 500, 22% return. You see, 2020 target date wasn't available before 2017. So, but you can still see how the other funds performed the other years. You can clearly see that the S&P 500 is beating out the 2020 target date for the Dow Jones, which is supposed to. 2020 target date, since we're a year away, is very conservative. They don't want you taking a lot of risk if you're getting close to retirement. Next up, there's a graph that shows you in the last year how much your money would have grown if you started off with $10,000. So if you were in the S&P 500, your $10,000 would have grown to about it would have grown to almost 11,000, and then you see the other funds below that one. Okay. Let's pick another topic. The fees. The fees are very important. So it breaks it down at the top. Expenses per $1,000. Each $1,000 that you got investment, they charge you $1, or that'd be 0.1%. And it tells you what types of fees that they cover. It also tells you the operating expenses. So that's how you find that information. It tells you administrative expenses. If there's an expense waiver type, expense waiver time limit. So you can look at all that stuff here. This is how you find it. You can see how much they're charging you to be in the fund. Next up is the portfolio. The portfolio is very important. The portfolio tells you what type of stocks or bonds are in the fund. So you look at the fund, it has 78 or 48% equity, 30% fixed income. It has 22% cash, and then like 1% other. It'll give you the top holdings. Normally it gives you the top 10 or so holdings in the fund. You see they got some of the big companies in there: Microsoft, Apple, Amazon, Facebook, Berkshire Hathaway, Johnson & Johnson, Alphabet, or Google, ExxonMobil, and Chase Bank. It tells you how much of each company stock is in this fund. So since this is a very conservative fund, they have less than 1% of each one of those major companies in the fund. If it was a very aggressive fund, they would have like more percentage, like 10%, 15% of some of these bigger companies in the fund. But they don't want you losing any money, but they do want your fund to gain. That's why they go with the bigger companies, but they just use smaller percentages of them. Okay, portfolio characteristics. You can see the number of holdings. They have about 21,000 different holdings in this fund. They got like 21,000 different stocks or bonds or fixed income assets in this fund. So that they want it to be pretty stable. They don't want you to lose any money. If you start looking at stocks, something to look at will be like the net assets in billions of dollars. How often, what percentage of the portfolio gets bought and sold per year. Okay, average market cap is how big the companies are. Like how much the average size of the companies. So you see the average market cap is like almost $60 billion. So these are pretty big companies that they're having a portfolio. The price to earnings, price to books, price to sell, all of that's important if you try to do just regular stocks. Since these are mutual funds, we're not going to worry about going over that. The top industries, the percentage of funds. So you got like 7% financials, 7% information technology. You got 6% real estate, 5% healthcare, 5% industrials, 5% consumer discretionary, communication services, consumer staples, energy, materials, utilities. And then they have the bond types. For the bonds, they'll tell you, they'll have corporate bonds, government bonds, and they tell you the percentages, mortgage-backed securities, mutual bonds, asset-backed securities, fixed income. It also tells you, this is the very important part, especially if you just do regular stocks or regular bonds. It tells you the credit quality of the funds. AAA bonds, they're very, very creditworthy. You get less return on it because you have to take less risk. When you get down to D bonds and C bonds and double C, triple C, those are very risky. You don't want to put a lot of money into those because you might not get your money back. It also tells you the maturity time of each fund. So the average maturity of these is, it told us at the beginning, but the average maturity is about 10 years. Let's look up here. Average duration. Average maturity about 11, almost 11 and a half years. So that's where you find that information at. It also tells you what portion of the world your fund is in. So like this fund has about 77% in the United States. It has some in Europe, some in Japan, on down to the rest of the world. Management. You look at the management, you want to always look at what the objective of the fund is. So the SSGA, which is State Street, the State Street Target Retirement 2020 Fund, seeks an investment return that approximates as closely as possible before expenses the performance of the custom benchmark, the index, over the long term. Okay, then it tells you the fund strategy. You can read that. It tells you what the fund strategy is. The fund strategy is very important. So I won't go over that, but take your time and read that. It tells you exactly what the fund is designed to do. It also tells you about what the risk is. You want to read over that? I'm not going to read over that. Read over that so you become more familiar with that. But this is where you find it at. Let's see what else we got. Okay. It tells you the fund facts. You see the SSGA Target Retirement 2020. It's a State Street fund. State Street is one of the bigger players for mutual funds. You see the inception date. The fund started in June of 2016. That's why you don't see a lot of information after 2016 about it. It tells you what the company that manages it is, State Street Global Advisors. That's SSGA. You see their address. You see their website. Mixed Asset Target 2020 Funds. Funds that seek to maximize access for retirement for an expected retirement date on or about 2020. So since it thinks you're going to retire in 2020, it's not going to be too aggressive or it's not going to be too risky for you because they don't want you losing your money before you retire. And after you retire, the investment mix stays a certain percentage of bonds, cash, and stocks so that you don't lose your money long term. They want you to have money during retirement. And that's pretty much how you find out all the information about a particular fund. Today we chose 2020 target date. Next up, we'll choose one of the other